Welcome to the end of day review for Tuesday, the 9th of January. Starting off with the economic calendar, what you can see is that there are no medium or high impact news events for the day, and thus there was no impact or considerations for our trading. Having said that, I'll quickly jump into the charts, starting off with the daily. What we can see is that we had four consecutive bullish candles, making the probability of another bullish day for today highly unlikely. Having said that, this this essentially means that our bias for the day is only to short, and any long base trades are invalid, um, which which I guess aligns with our current 4H narrative, which I will touch on right now. In terms of market structure, we are still confirmed bullish market structure wise. In terms of trading longs, unfortunately, all the pro-trend POIs were invalidated, and everything to the left is perfectly mitigated, which then means that we can't actually validate a long until we actually body break this 4H LPOS candle, which would then validate a primary leg on the 4H, from which we can then consider trading anywhere in this leg on the 5, 15 or 30 minute accordingly. However, what I do need to point out is that we do have this 4H pullback phase that was validated back in December or early January rather, and because the pullback phase has actually achieved its objective, we do have the last point of supply from which we can still consider shorting from. However, we do have to ensure that there is sufficient liquidity in the leg on the time frame that we are trading, and we have appropriate 4H backing to enable us to take these counter trend trades on the assumption that we'll take out the IRL but not necessarily break the swing structure, because the swing structure is actually confirmed. Moving on to the 15 minute, what we can see here is that within this leg that mitigated the 4H OB, there wasn't actually a 15-minute valid OB to actually validate the secondary leg, which is why we will move on to the 5 minutes soon. But I just wanted to point it out, or just point out the fact that there is no validation on the 15 minute, and because of this, that is the reason for moving onto the 5 minute. Otherwise, we don't generally move on to the 5 minute. The other thing to point out is that there would be no liquidity in the leg if this is the extreme, because if once this is taken out, then we've essentially achieved the target for this pullback phase idea counter trend. Then quickly, or swiftly should I say, moving on to the 5 minute, what we can see here is that yesterday, being Monday the 8th of January, we actually validated the secondary leg. We did in fact take a loss yesterday. I can quickly put that on around here. And then subsequent to that, New York put in a high of the day, telling us that the day was going to close bullish. Yesterday was a similar situation where we anticipated that we'd actually have a bearish day, but that didn't play out. So when New York made the high of the day, then we simply accepted that we were wrong. Thus, we essentially come to today, and today we're in a bit of a peculiar position because we don't really have a fib to anchor on. In terms of current high of the day anchoring our fib to, we can't do that because the current day hasn't extended the secondary leg, nor has it reset the leg. And then in terms of using the previous day, the issue with this is that the previous low of the day was created before the previous high of the day, thus making the direction of the previous high and low of the day being to the upside. This mismatch between the direction of the previous high and low of the day and the existing secondary leg makes it invalid to actually use a fib anchored to this, essentially something like that. And we simply have to be patient and wait for either the secondary leg to extend or for it to be reset to take any trades. as you can see, none of that really materialized today. Price continued downwards, whilst our daily direction is correct. Actually finding a valid high probability entry point was scarce for today, and thus we didn't take any entries. With regards to what I mentioned right here, I think the important thing to point out is there's a couple of different scenarios, right? So in this case, we came to this day, and this secondary leg is already established. And even though that the previous low of previous day did create the extreme or extend the secondary leg, in the current day, no such relation exists. The other thing to potentially mention is in a situation where we were looking at yesterday, for example, you've got your previous high of the day that is created after the low of the day. However, this situation is different because in this situation, we if actually validate the new secondary leg in the current day, or the if the secondary leg was validated here, but the current day extended the secondary leg, then it would be valid to actually anchor off up to the previous high of the day and then use this extreme, making the secondary leg and any POI that aligns to the fib anchored between these points valid. This is essentially a lesson for me today because I realized that although I had this concept in my mind, I didn't actually define it on paper, and thus I did that exercise and actually added it to my trading plan so that in the future, when I do come across circumstances like this, I do indeed know how to address it. That concludes my end of day review for today. I hope you enjoyed it, and we'll chat again for tomorrow's London outlook.